Thank you, everybody, for attending our webinar this afternoon. My name is Eric Ralia. I'm with Dominion Systems, Payroll Human Resource Service here in Grand Rapids. We're going to be talking today about COVID-19 best practices for payroll and HR and things that we have found across all businesses in 2020 and moving into 2021. I've been with Dominion Systems for 27 years, so I've had a lot of experience in the payroll HR world. So what we're trying to do today is illuminate some ways in which COVID has impacted businesses in the areas of payroll and HR, and talk about some best practices or things to be aware of as we move into 2021. 2020, obviously, as most people realize, was an extremely tough year for businesses of all types, whether manufacturing, retail, or in the building management space. So as we get into this, one of the biggest areas that has impacted a lot of businesses from 2020 and what will have a lot of repercussions going into 2021 and 2022 is the relation between COVID-19 and unemployment. In the state of Michigan, not that long ago, we got out of recently what we consider the Great Recession, which had a huge impact for unemployment. Things were turning around, and then we hit 2019, 2020, and COVID-19. And so there's been a big impact for a lot of businesses as to how that will affect their overall costs, dealing with employees, and what will be the ramifications going forward into 2021 and possibly even 2022. Because of COVID-19, as everyone realizes, there's a lot of unemployment. As of today, as people might have noticed online or during the news, we still got over 19 million people still claiming unemployment benefits throughout the United States of America. This week, there were still 684,000 people that filed new claims. So this unheard of unemployment is inevitably going to affect businesses. It's going to cause them to have increased expenses when it comes to their FUTA expense or their SUTA expense. So we're going to talk about how that might affect businesses, things to be aware of. As people realize as they're looking at the deck here, trust funds basically for unemployment have been depleted at a rapid pace. As everyone might know or might not know, state of Michigan, like most states, have an unemployment, businesses have an unemployment or SUTA account with which they pay money into. Employees, if I lay them off or terminate them and they get unemployment, those dollars come out of my unemployment account at the state level. And as I deplete my state unemployment account, that would cause in the upcoming new year, new rates to come out that would be higher than what they would be in the previous year. Those higher rates are used to fund those accounts to cover possible new unemployment claims. As people might know, those unemployment rates, while they can go up very rapidly for a lot of businesses, it takes a number of years to offset those, even if I don't have claims going into 2022, 2023, 2024. It will take a number of years for that rate to get lowered to where it might have previously been. The states also have a backstop, which would be the federal government. So that's where we get into things like FUTA tax. The FUTA tax program is a backstop to the state program. So as the states are getting their funds depleted over the course of the last year going into this year, the federal government then has to backstop those programs. And so as you can see by the current slide, 23 states already out of our 50 have already borrowed $46.3 billion from the federal government. That means if they can't repay those funds in a timely enough manner back to the federal government, the state FUTA tax or the state rates will go up, and also the federal unemployment tax rate, which is a discounted rate, will also be going up. States also are changing up their rating calculations so that they're a little bit more relevant in what counts for unemployment and how those rates might get affected going forward. We've seen some potential increase in SUTA tax costs that are going to definitely be felt this year. A lot of you might have already gotten your rate determinations for 2021. From the state of Michigan. If you were able to not have to lay off employees or let employees go and have claims go against your account, you might have seen that your rate was able to stay at where it was normally at before or have a little uptick. A lot of our clients, what we're noticing, and a lot of business I'm working with, is their rates have increased very quickly from 2020 to 2021. As I mentioned before, that will also impact businesses going into 2022 and beyond. 12 states have increased their taxable wage basis. In the state of Michigan, we were one of those states that recently we had that increase come out of the Great Recession, where the taxable wage base was $9,000, and now after that time frame was increased to for most businesses up to $9,500. There's already been discussion at the state level that might go to $10,000. What does that mean to a business in the state of Michigan? That the amount of tax that you pay for state unemployment will also go up, and it'll be for a longer amount. Annual benefits that have exceeded annual state tax revenues for the first time since quarter 2011, as we're coming out of the Great Recession. Some of the new proposed state provisions that we've been hearing about from some of our sources say that they're going to be spreading out some of these costs across businesses, even if you didn't have a lot of claims in the previous year and going into 2021. As an effort to help minimize certain costs across businesses, you might see upticks in the rate even if you didn't have unemployment claims against your account. Employers will ultimately bear the financial burden associated with COVID-19 in this area. So some further details. As you might understand, when we talk about federal unemployment tax, FUTA tax, it acts as a backstop to the state of Michigan, since most businesses that I deal with are in the state. Most people sometimes mistakenly understand that the FUTA rate is a much lower rate than what it actually is. The FUTA tax credit reduction in 2022, the federal rate is technically 6% on the first $7,000 of employee wages, and that resets every calendar year. So as soon as an employee makes more than $7,000 in the current calendar year, at $7,001, I don't have to pay any more FUTA tax until next January. A lot of businesses don't understand or are not necessarily aware that that's the discounted rate. If the state of Michigan is in arrears for unemployment as a whole and is unable to pay back to the state or the federal government, that rate can balloon very quickly up to 6%, where the discount would go away. And so that happened to the state of Michigan back in 2011, 2012. So as a payroll outsourcing company, as a consultant, when I deal with business and talk to them about that, we should be thinking about that as a possibility going into 2021, 2022. If those funds can't be sent back to the federal government or paid back, that could impact a business because your expenses would obviously go up. And as I mentioned before, the state of Michigan has already increased the taxable wage base for 2021 up to $9,500. So. What we're seeing out here is some employers are experiencing a surge in hiring, while others are experiencing upward spikes in furloughs or layoffs still, depending on their industry. There's an unprecedented number of initial unemployment claims as placed stress on the systems nationwide. There have been 73 million initial unemployment claims filed during the 41 weeks ended December 26th of last year. So 2021 rate forecasting says that there's a lot of uncertainty about how states are beginning altering their rating calculations to compensate for the volume of claims currently being experienced. There's going to be some socialization of charges, like I mentioned before. So some businesses are going to need to, depending on the number of employees that you have and depending on what your current state rate is, there should be some good discussions with your accounting group within your company potentially of trying to predict what those cost increases could be, to either have those funds set aside or just anticipate what might happen as we move from 2021 into 2022. So some ways to possibly mitigate that, and what does it mean for businesses? You need to plan for expected increases to these expenses, which are funded by the employer. It's ever critical to start managing also your state unemployment account. And what I mean by that is every business that operates within the state of Michigan has, again, their own unemployment account. As a business owner, you should be able to look at that account and monitor it on a regular basis. State of Michigan, a number of years ago, during the Great Recession, had a stat where they said the state level could experience individual accounts that would have up to 10% to 15% errors within that account. What that means is employees got unemployment claims for much longer than they should have gotten them, or they got incorrect amounts, or they got amounts that they shouldn't have even been awarded. So as a business owner, if I'm dealing with these escalated rates for state unemployment and federal unemployment, at the state level, I should be monitoring my account at all times to make sure that if I do have claims, they're for the correct amount, that the claims end when they're supposed to, and that if I'm letting people go for the few reasons potentially that could be brought to arbitration, that I'm fighting those claims so that my account has the best balance possible, or I'm getting credits applied back to my account. So if you have questions on that, obviously I would talk to, if you have a tax lawyer, an accountant that works for your company, those would also be resources that I would go to if you're having questions as how this could impact my business and my overall expenses during the course of the year. There's also services out there that are available to businesses that work specifically in this arena, and they can help with admin for your unemployment accounts at the state level, and also help with any type of administration that you might have for claims and arbitration, things along those lines. So those are valuable resources to look at online, or potentially talk to people that are in the know to help you with these, because they can be very expensive. Another area that helps and dovetails directly in with unemployment claims and the expense would be the PPP loan coverage. Now, what happened in there are a large number of our clients that took advantage of the PPP loan coverage from last year, and it's been rolled into 2021. So at this part of the presentation, I want to just touch basically on what PPP is, and if you haven't taken advantage of it yet, or have thought about it but said, I don't know if that's right for our business, what you can expect, what are things that could be potentially beneficial to your company. So, you're a business that stayed open during the pandemic, but you still need to make payroll. Your cash flow has been impacted because we've got less revenue. I've got less clients that are paying us. They're running into problems themselves due to the COVID-19. PPP is the loan capability through the federal government that can cover the following payroll costs: employee compensations for USA residents in the form of salary, wages, commissions, cash tips or the equivalents, payment for vacation, parental, family, medical, sick leave, allowance for separation or dismissal type things, payment for the provision of employee benefits consisting of group health care. So PPP, a lot of folks have thought about it as strictly a way to pay my employees or keep them on the payrolls, but it also has an important area in terms of healthcare coverage, making sure that your employees have healthcare coverage and getting those payments made so that if they do encounter issues related to COVID-19, that there's no gap there for them. Payment of state and local taxes assessed on compensation for employees. And also, a lot of people weren't aware with PPP that there is some provisions in there for independent contractors, sole proprietors. So it's not just businesses that have actual employees. At least 60%, say for example, I submit my paperwork to get a PPP loan, at least 60% of your funds must cover qualifying payroll costs. They would be, the remainder can be used for the following. I had a number of clients during the last year that said, well, does all of these dollar amounts have to be submitted for my payroll? No, not necessarily. 60% at least needs to be utilized for that, but then the other remaining 40% or less can be used for things like employee benefits, for paying of those. Mortgage interest payments. Now, we're not talking about mortgage principal, but some of those funds could be used for taking care of those elements. Operation costs like software, cloud computing services, rent, utilities, property damage caused by public disturbances in 2020, supplier costs, worker protection expenses also. I can use these PPP funds for safety, whether it's equipment for masks for employees, plexiglass, changing up how we interact with clients or our actual employee groups. So the PPP loan coverage is a great tool that a lot of our clients took advantage of. There are some PPP loan restrictions that are out there right now. You can't be using for any compensation for employees whose principal place of residence outside the United States of America. So that would be not available through this loan coverage. Compensation for employees that made annual salary of $100,000 or more would be exempt out of this. federal employment taxes imposed or withheld during the applicable period, and then qualified sick family leave where credit is allowed. There's a couple different areas here that would not qualify, but there are a number of other areas that we're able to help businesses out. So when I'm dealing with PPP, there's a lot of information that's needed to apply for these loans if you haven't done that before, that are related to items of employee wages, things along those lines. If you are currently taking care of your payroll in-house, you should be able to get that from the existing software package that you're using. If you're working with a CPA or you're working with a service, they should be able to help you get that information so you could get the applications for those loans. And then obviously the biggest thing about PPP is loan forgiveness. If you use your loans for these following reasons, a lot of your loan can be forgiven at the federal level, which means I don't necessarily even have to pay those loans back. So again, it was a lifeline thrown out by the federal government. I'm sure a lot of you have worked through these processes already in 2020. A lot of these processes are going to be continued into 2021. So as someone that's dealt with a lot of my clients, a suggestion I would have is if you haven't taken advantage of it, please look into it. It can be a valuable resource for you. So another area that has really taken off in terms of HR as we move from the payroll, the taxation, PPP, is performance reviews. That is an area that's caused a lot of attention in 2020 because a lot of businesses now are concerned about their employee groups. And what I mean by that is previously going into COVID-19, the job market for a lot of businesses was very tight. A lot of my clients were saying that we were having a real tough time getting valuable candidates into our business because we had openings. And so it was an employees market. And so prior to COVID-19, there was a lot of demand for how do we take advantage of getting people into the system, but more importantly, retain and keep those employees that we already had on our payrolls that we liked and did a great job for us. Now with COVID-19, as we're starting to go through the reopening and talking to a lot of HR managers, payroll people, the thought process was with all these unemployed people, now that we're starting to reopen, we should see droves of ex-employees or droves of folks coming back to get jobs. And what I'm hearing for a lot of businesses is that's not necessarily the case. For whatever reasons, there's been talk about the stimulus funds that were given out to employees, but it's still very much an employees-driven job market, not employers. And so with that being said, there's a real demand here to keep your valuable employees on the payroll and get the most out of them, especially in a tight job market. So what we're going to be talking about in this next area here is performance reviews. Performance reviews are an area with a lot of businesses in the COVID remote work area, tight job market, where I can see a lot of return on my invested dollar and how I should possibly go about doing this in 2021. A lot of businesses I've talked to recently have said, well, you know what, I don't even know if it's worth going through performance reviews with employees at this point. It takes a lot of time and effort. And I have to give this off to supervisors, or it's the payroll HR department that's responsible for doing this. So some stats that I always like to throw out here, while it's important to do performance reviews to keep that existing staff in place, let them know how they're doing. The cost to replace an employee, according to SHRM, and it's at the state levels, between 90% and 200% of an employee's annual salary. So what does that mean? As an employee, I might hire somebody in that's been with my company 3, 4, 5 years. They make $50,000, $60,000 a year. If they leave, if I terminate them, and my next pick is a perfect candidate, the cost for me to replace that employee, to get that new employee to get trained up into the area that previous employee was, is going to cost me 90 to 200% of that person that left's annual salary. That's huge. So again, when we're talking about remote remote work and keeping existing staffs, performance reviews are an area where if I can keep that existing employee in place, let them know how they're doing, let them know how they can progress in my company and to get better at certain items, that's a huge cost savings for employers. 41.4 million US employees left their job voluntarily in 2018. This was before COVID-19. Work Institute study said that the increase in voluntary quits could result in a 35% turnover rate by 2023. So that's even before we encountered COVID in 2020 and 2021. The job market was changing. So with so much turnover in the job market prior to COVID and now going into COVID, there's been a real importance in this area. And again, it can take 1 to 2 years before a new employee is fully productive as an existing employee. Succession planning for smooth transitions of leadership can make or break a company. So with that being said, performance reviews. Performance reviews, a lot of businesses have issues because it's a very manual process. And if I'm a business that's looking at how we do performances, the standard model for a lot of businesses is it's once a year, it's a piece of paper, it's historical. We're doing it at the end of the calendar year. And so with that, I don't necessarily get the results that I'm looking for. So especially with a remote workplace, there should be different ways to be able to change that up. And so there's a lot of programs out there nowadays that can make that your life easier. So things to think about would be looking at potential software programs to be able to help with this, make it a more automatic process. With a remote employee group, being able to submit electronic notifications to employees to do performance reviews automatically. And then also be able to have supervisors and employees be able to do self-evaluations or reviews electronically through a tablet, through their phone, through a PC while they're working at home. A lot of systems out there nowadays can also customize reviews. So what the model is we've seen before, like I mentioned earlier, is an annual review process. There is a big shift in the industry nowadays to move these to more frequent. So looking at a biannual or possibly quarterly review session, because that way when I'm sitting down with the employee, I can do more of a cost correction or a course correction, excuse me, with what they're doing to get them on where we need them to be, as opposed to doing a review at the end of the year and having it just basically anecdotal and historical and not being able to really make those changes to get the best out of my employees. Not to mention also, we're in an instant gratification environment for a lot of folks. So by sitting down with employees biannually, quarterly, I've even had businesses move to a monthly sort of checkup from the neck up review process. It lets the employee know exactly how that supervisor thinks they're doing, how the management executive team thinks that employee is doing. It lets them know that you're a valuable employee for our company and we want you to stay with our business and we don't want you to walk out the door. What can we do to keep you in our company, keep you involved in our company culture? So different types of products out there nowadays can really automate and make this a lot better for businesses. Conduct more frequent reviews, like I mentioned, perhaps quarterly or even monthly. Set clear expectations for roles. Through performance reviews, I can actually let employees know on a really frequent basis what they're supposed to do and then get feedback from them. Are your job responsibilities being clearly defined? Do you understand what is required of you? If you're happy with our company, and you're looking for other opportunities, what can we do to get those opportunities in front of you? What is the career path or training that you need or want? With employee performance reviews, you need to be able to encourage open, honest feedback from all parties. So get everything out on the table. Tailor the review to the role. A lot of performance reviews nowadays can be very short. The old model of having a 10-page document where I'm sitting down and going through all of these items, that's really out of date. People don't have the attention spans for that nowadays. So you should be able to try to take these employee reviews, performance reviews, and whittle them down to be very effective, short. Most businesses will tell you that review should only take, technically 30, 40 minutes to go with an employee, if that. If I'm spending a couple hours with that employee to go through a performance review, I'm not approaching that performance review in the proper light. I'm doing it not as frequently as I should, and I've got way too much information in there. So also it's important to make sure that the review process and what happens after that review process is understood by all. So if I do have a review with an employee, and there is a plan to course correct some sort of actions or something that's happening with that employee, that the employee is very clear about what the next actions will be, what the next review or follow-up process should be, okay? And also engage the employee feedback if there is a conflict. For example, supervisor has a conflict with the employee or employee has a conflict with the supervisor. Make sure that we're bringing resources to bear so that more people are involved, so that we know what's going on to have the situation diffused or have it overcome. Having the HR department in, head of production, head of this department, have them come in and work through these areas is very beneficial. Another area that we're finding because of COVID is timekeeping and labor management. Now, a lot of businesses out there nowadays, again, we're dealing with remote workplaces where employees are out at sites, they're out at buildings that we're managing. What is the best way for me to manage that labor? So when I'm talking about timekeeping, the idea behind that has typically been, well, an employee punches a clock, right? And they punch in and they punch out at the end of their day. And so I'm just using the timekeeping product to gather up their hours so that they can get paid if they're an hourly employee. Whereas what we're seeing is a real shift now away from that timekeeping model to more of a labor management model. And what I mean by labor management is having a product or a process out there where an employee has not only a schedule, but then I can be able to take a look at how they're performing against that schedule so that expectations are met by not only the employee, but by also the employer. So when I'm talking about tracking time, I can tell whether or not an employee is late, or they take too long of a lunch, or they leave early before their shift's done. And there could be good reasons for an employee to do that. So we're not just always talking about coming to the employee because there's a problem with the employee. Sometimes you'll run into, especially in a tight job market, employees are having to do a lot of things that they didn't have to do previously. And so when we run across situations where an employee is chronically late, a good labor management system for a business might be able to illuminate that to the employee and the supervisor, and they might be able to fix that issue. For example, I recently had a client where an employee was constantly showing up late, and this employee had never been late up to that point. And so by having a real good labor management system in place, they were able to talk to that employee and see in real time, you've been late for the last couple days, what's going on? That employee had a situation where their daycare changed, okay, because of COVID. And so normally they were able to drop their child off at this time. Because of COVID, it got backed up. So that's why the employee was being late chronically. So in that case, it allowed a very easy conversation between the supervisor and the employee to say, okay, let's change your schedule a little bit. We don't want to lose you as an employee. We can be flexible here. So when I'm talking about labor management, that's a system that can be very beneficial to a business. Things that go into tracking employees' time in a labor management system would things be like biometric time clocks, geofencing, PC mobile punching, allowing employees to punch in and out of either kiosks or possibly from a PC. Systems need to have a very flexible and easy to use scheduling. If you're really looking at a labor management system, what I'm trying to do there is I should be able to add in scheduling. So I need to have a product that is very easy to be able to have flexible scheduling, to be able to change scheduling at a moment's notice for an employee or group of employees. It would be very, very beneficial to be able to also offer an integration with whatever payroll platform a business might use, whether it's an in-house accounting software package, working with my CPA, or potentially working with a service. It should also be able to give you on-demand labor reporting. So most of the systems out there nowadays, not only working with labor management, but should be able to give you forecasting tools, things like who's approaching overtime, scheduled versus worked hours, items like, I want to keep track of, in the next week, how many people are going to be off on Friday. We have, we're in the state of Michigan, so deer hunting season is always a big time for businesses. Some businesses even, shut down during that time frame. So having leave management requests come in for different periods of the year that are high demand, being able to manage the labor appropriately. A lot of good systems out there too should be able to have your frontline supervisors be able to review, edit, approve time for the individual employees. If I'm a business that's not doing that right now, that is a huge trend to offload that from the payroll HR departments and move that more towards frontline supervisors. They're the people that are dealing with their direct reports all the time. So we should be able to give them tools that allow them to do this very easily without taking up a lot of their valuable time. Some ideas that have been very popular nowadays, and again, this is just an idea for businesses. When COVID-19 hit, when people started to come back to work, or if I was in an industry that was deemed essential, a lot of people are used to old-fashioned time clocks where I would go up to that time clock and put a time card in there, not an electronic system, or touch something, click on a button, things along those lines. What we're finding in the last year is a huge rise in biometric and especially touchless clocks. So the technology is out there for a lot of businesses to be able to take advantage of these. There is technology out there that allows employees to actually go up to a clock and be able to stare at a clock, and it will read up to 20 or 30 points on their face, know it's that employee, and then punch them in. What's great about that is no one has to touch anything. So it reduces transmission issues with either COVID, the flu, or dealing with dirty environments, things along those lines. In fact, the technology, especially within the last 6 months, has come out that there's a lot of clocks out there that are available to businesses now that even can take a temperature read. So an employee goes up to a clock, and if we have concerns about, well, people can't afford to be off of work and they might be sick, I could stop things at a timekeeping component where an employee goes up to a clock, their temperature is immediately taken, and if they have a fever, not allowing that employee to punch in, having them to go see the HR department or go home. The technology is also out there with masks, regardless of whether employees are wearing masks or not. The technology with clocks nowadays allows employees to be able to even know when they're wearing a mask. So if I'm using something like a facial recognition reader, being able to pull that mask down and then not be able to have the punch accepted until I put that mask back up. So again, just ideas, if I'm dealing in a clock environment, ways that I can help slow the transmission of COVID within my organization. Also, liability issues. A lot of this technology can help offset potential liability that we know might be coming down the pipeline due to COVID in the years going forward. Another area that we've run into that's very popular with building management companies or businesses that are dealing with a lot of remote locations is geofencing. There's always been a struggle with a lot of businesses to say, I'm trying to manage my labor, but how do I know for a fact that Eric is where he says he's supposed to be? There's a lot of technology out here around labor management, timekeeping, that allows you to do things called geofencing, where a business can basically take coordinates and put that around one of the buildings that we manage, for example, or our facility, and allowing employees then to use their smart device to punch in or out. But if they're outside of that actual physical location by 50 feet, 100 feet, notify the payroll HR supervisor that the employee, when they punched in, was not actually at that location. They were 3 miles down the street. They were someplace else. So geofencing is something that's been around. It's relatively recent, within the last 3 to 4 years. But it's really gotten a lot of prevalence, especially over this last year. So you can send text alerts on your phone when you're in a store, you're offered a certain product. I mean, those are the common geofencing for even not employees, but just shopping. So it's great for employees. It allows them to use their phones. It allows them to use tablets, things along those lines. It allows a lot of flexibility, so I can have multiple locations. It can eliminate, for a lot of businesses, costly time clock hardware, or the reliance on kiosks, or the transmission also gets reduced, because if I'm using my phone, if I'm using a tablet that's specific to the employee, the only person using it is that employee. So again, I'm talking about COVID-related stuff and how to just stop that impact on my business. Geofencing vulnerabilities, if there's interest in that, understand that with every technology, there are certain limitations. Geofencing for certain components has a little bit of a margin of error. So what you run into sometimes with some devices, you'll get a small, if I punch in, people might see this with navigation through their phones, where it says I'm supposed to be at this restaurant, or I'm supposed to be at this location, and it's across the street. So with a lot of technology, the newer the device that the employee is using for geofencing, the better and more accurate that geofencing will work in pinpointing where they're at. Older clocks or older phones, older tablets, you'd have potentially an issue. The other caveat with geofencing is if I'm using a geofencing capability with a business and the business is not supplying me with a company phone, employees can turn off their location options here. So it's a discussion, if you're thinking about something along those lines for a business, is to be able to have a good discussion with your employees about that and expectations. Yeah, again, geofencing, biometric timekeeping, those type of items are great for helping with COVID, or if I'm dealing with remote workforces. Some geofencing advantages, like we talked about, eliminates the need for kiosks. It can display punch location in case of an emergency or an issue. Ideal for employees that travel to different job sites or have multiple locations that they can work at. Last item that we'll be talking about today is another area that we found that is becoming more and more prevalent for businesses, even prior to COVID-19, but has gotten a lot of importance within the last 6 months to a year, and that's earned wage access or instant pay. A lot of businesses might not be aware that 22% of Americans are either unbanked or underbanked. Which means you might have a group of employees that don't have access to credit because they don't have bank accounts, checking accounts, savings accounts, and they live very close to the margins. They either live paycheck to paycheck, or there's a good group of people that work that are under paycheck to paycheck. So how do we help those people still be employed, but be able to take care of any types of emergency or needs that arrive? It's earned wage access or instant pay. So one of the ways that businesses can help, and I'm going to go back to retention of employees or attracting employees pre and post COVID, is being able to offer an instant pay or earned wage access. So to retain top talent, consider listing this as possibly a perk. So when I'm doing job openings or applications on whatever platform I'm using, whether it's Indeed or a different types of product, if you offer instant pay, it gets more clicks. Earned wage access can make every day a payday for employees by letting them access funds when they need it. It can also decrease payroll costs. A lot of providers for earned wage access or instant pay offer a pay card at no charge to you, no charge to the employee, and basically becomes the employee's bank for direct deposits. This can reduce or eliminate costly paper checks and also pay cards for your company. So the idea behind instant pay or earned wage access, the idea behind it is basically giving employees what looks to be a debit card. And that debit card typically is branded by one of the big agencies, MasterCard, Visa, something along those lines. And what you're doing with instant pay or earned wage access is loading that card up every time an employee works a shift. Earned wage access, instant pay really came over from Lyft and those type of vehicle products where I was working as, taking people different places. I was recording their fares for bringing them to different spots, and then being able to cash out at the end of the shift. That is translated from those industries across into most businesses now. So the idea would be is an employee gets done with their work shift, and then if they run into a problem the next day, I can't get my car, I don't have enough money to put gas in my vehicle, I had a problem with my daycare and I don't have those funds, being able to take money from a previously worked shift and have it transferred immediately onto a debit card that they can then use to cover these unplanned expenses. So there are a lot of apps in the market that offer earned wage access. Some are better than others. When looking for a provider, keep in mind you want something that's a no or low cost for employees and employers. There's a lot of products out there nowadays that can get very pricey for employees. Every time they use it, they get clipped for a certain amount. But there are a lot of vendors out there that also offer programs where they make money off of the merchant services, Visa or MasterCard, that's on that actual card that employees are using. You want to make sure that it doesn't interrupt your payroll's processes or cash flow. So what we're saying there is, as employees are using this against shifts that they've already worked, they're taking back a certain dollar amount against these shifts to get money instantaneous. A lot of programs can prevent employees from overdrafting or taking withdrawals when funds are insufficient. So, example, if I have a shift that I've worked 8 hours and I'm making $10 an hour, I have $80 of available cash. A lot of programs out there can limit the employee to be able to only take up to $40 of that available $80 to cover taxes, healthcare insurance needs, things along those lines. Programs can also and should also offer financial wellness tools for the employees. So when I'm using earned wage access, instant pay products, I should be able to have some help in there to help employees plan for upcoming expenses. Things like, hey, my health insurance is due, my rent is due, my car payment is due. A lot of these programs out there can provide employees with planning that shows them, oh, next week I have this, so maybe I don't want to take out half of my shift pay right now. Many providers only work with companies that have over 250 or more employees, but there is a growing amount of that product out there that now is supplying for under. EWA assumes liability. A lot of the programs out there will also assume liability for employee overdraft or insufficient issues, which means technically the employer is not going to be on the hook if an employee does not have the proper amount of money to cover the loans that they've taken against their upcoming pay. That's it for today in terms of my presentation. Hopefully you found that there was some good information there regarding impact of unemployment, impact to timekeeping, new trends for performance reviews, PPP, earned wage access. At this point, if anyone has any questions, feel free to enter in the questions on the question and answer, and I'll answer them right now.
I will start by saying thank you, Eric. A great presentation on things that we often are not at front of mind oftentimes. And the last 2 years, we've seen that impacts on so many areas of our lives. So it's greatly appreciate the information that you provided.
No problem. It's been this last year has been very unique. Out of my 27 years, it's been super unique, and we've run into a lot of things that people haven't encountered before. So if there's any way that anyone has any questions after this presentation, feel free to reach out.